The stock market's trading mixed today after yesterday's strong session, as the January retail sales numbers came in slightly weaker than estimated, coming in at a decline of 0.8% month over month compared to the negative 0.2% expected. And then retail sales ex autos was down 0.6% compared to the 0.2% estimated. This was the weakest retail sales report since March of last year. And this goes to show you that part of this is expected, in my opinion, because December was so strong with the holiday season with that. So it's lapping against very hard numbers. But at the end of the day, the consumer amounts to about 66 to 70% of the economy and in GDP, in the GDP equation. So this is something that the Federal Reserve needs to keep in mind in terms of their rate cut expectations this year, and take this into account besides the CPI inflation readings in terms of calculating when they're going to cut rates this year. Personally, I think they'll do it end of Q2, early Q3. We'll have to see. And I want to make one quick correction in my video I made yesterday. Yes, I think the tailwinds for technology and AI will override the headwinds from CPI inflation in terms of stock market returns. And I think the NASDAQ, there's a possibility, could double or perhaps even triple for the next 3 to 5 years in this 3 to 5 year bull market. However, that doesn't mean that there can't be multiple 10% corrections and perhaps some 15% corrections in that time span in order to get there. Right now, I think we're towards the beginning of this AI bubble. I think it'll likely end in a bubble in 3 to 5 years. By then, I think it'll be, I think it's possible for after the NASDAQ doubles or triples, it's possible for there to be about a 30% decline. But in the meantime, I'm pretty bullish because of all this AI spend. You're hearing companies spend more and more on AI to try to be as efficient as possible. There's so much hype about it in the media. And this is a very important technology about the importance is similar to the internet and electricity in terms of productivity gains. So I still think that the bull market will last 3 to 5 years, and it's possible for the NASDAQ to double or even triple. But I do think it'll end in a kind of bubble situation. And I think it would, I think that exuberance will lead to probably a 30% correction from the NASDAQ after that. But in the meantime, I'm pretty optimistic. And as I said, yeah, there might be some mini pullbacks with short-term profit taking around the 10 to 15% range. But I think that's healthy, and I think that's what the market needs. And right now, yeah, the market might be a little bit overbought in the short term. We might be even ripe for a little, maybe even a 5 to 10% correction right now. But that doesn't change my 3 to 5 year view on the strength of AI in the economy and the market.